and we want to believe that you are well. If you're not well, we believe his stripes heal us. So his stripes will heal you. That is Jesus' stripes. And a lot is going on. And the day was really very, very busy. We know Women's Day is on. Looking out for the mess in the country, it is important that we now discuss taxes. Of course, we've had issues where the SMEs are complaining about the taxes and how these various taxes are categorized. Now, the answer is on this very platform. We break down these taxes for you so that you don't feel as someone who is cheated, but also as an obligation of you as a citizen, because at the end of the day, you are going to use the road, you are going to use the hospitals, you are going to use the facilities that are constructed using or that are established using the taxes you pay. Edwin Austin Mukalazi is my name. Now, we are yet to receive some good news. We know that there is a retreat going on in Reza Conference Center, and today we hope to receive good news. We are expecting two bishops to be announced, bishop elects to be announced soon or later. Now, just keep it on Church of Uganda Family TV for the update, but also on our social media platforms. We shall bring you all the proceedings. Now, who are these bishops? You are yet to know, especially when the process is done. But what we know is the election is still ongoing, and when it is successfully completed, His Grace, the Archbishop, will come out and address the media. So, soon or later, we shall know who the bishops are, the bishop elects are. Today we are discussing taxation of rental income. What is rental income? Who is a landlord or a landlord, and very many other things. What we expect in today's discussion with Dedan, who is the team leader of Demo Consults. Demo Consults is a tax advisory firm, and he's here with us. He has dedicated his time. This is, I think, our 6th or 5th week with him, and we don't take this for granted. We are grateful that you are with us once again.
Thank you for having me again.
Yeah, and kind of greet our viewers. Then we get into our discussion today, because this is so pertinent, and I think more practical than what we've been sharing. Yeah.
Okay, good evening, viewers. I hope you will enjoy this show tonight.
Okay. I look at someone who is saving their money. I know our brothers and sisters who have gone abroad to work. They want so much to invest in rentals. And I think this information is really very, very important, that those who are already having rentals and those who are willing to invest in real estate and all that should listen to this, because at the end of that day, they are the victims. True. But just to start it from, what is rental income?
Yeah, thank you again for this show.
Yes.
Before we go into what is rental income,
yes,
I want to first give a brief background. In that, in our previous discussions,
yes,
we said that under Section 17 of the Income Tax Act, when you are taxing, for example, an individual, me and you, but also when you are taxing non-individuals, companies, retirement funds, trustees, you look at what we call gross income. That's where I want to start from.
Yes.
That when you are looking at gross income, for example, for me and you, we are looking at what we have earned from all sources of income. And what are these sources of income? That possibly I'm employed, so I have employment income. I'm in a business, I have business income. And I have properties, and specifically, in this case, rental properties. These are assets that yield monthly or periodical incomes, specifically rentals. Now, again, under the Income Tax Act, we are looking at Section 20. It is the section that guides us when we are looking at taxation of properties. So that is now where rental income falls. In the same regard, Section 5 of the Income Tax Act imposes a tax called rental tax on every person who earns rental income in a year. Now, that said, we are saying that if you have a house, a building,
yes,
that someone is occupying for a fee or at a fee, either it's a commercial building or you have a residential building where people come and stay at a fee that you charge them periodically. It can be monthly, it can be annually, depending on the arrangements. So we want tonight to discuss and see if I'm an individual, I have my rental in Namugongo, whichever area of Uganda, or I'm an individual who actually owns an arcade downtown. What is the treatment of tax in accordance with the tax law? But also, if I'm a company and I have several buildings, be it commercial buildings or residential buildings, what's the tax treatment? Which taxes am I meant or required to pay in as far as the income tax law is concerned? Now, with that, we shall go into, first of all, me and you, individuals, before we go into non-individuals. Now,
before we rental tax, you talked about rental tax, and for how long has rental tax been in existence? Because it became so popular when the Landlord and Tenants Act of 2022, I think, was enacted. I think that is when now people started hearing about rental tax. Before, I don't know whether it existed, but
well, as I said, that it is a property tax like any other property taxes.
Yes.
It has been there.
Okay.
But possibly it has not been strongly pronounced. And right, as you are saying, rent or properties has been an avenue where most Ugandans have always put their money in trying to hide away from the taxman. And that situation has actually been reversed. It is, of course, a matter of time. It may not be that everyone has been brought on board, but the authority, the Uganda Revenue Authority, is actually doing all it takes to make sure that irrespective of where you are located, as long as you are earning an income through renting or letting out, then you should also make a contribution in terms of tax. Yes, so it has been there. That law you are talking about, it is a recent development.
Yes,
that was trying now to guide the relationship between a landlord and
a tenant.
It is recent, but rental tax has been on. Actually, when you look at the law, it is one of the sections of the act that has been amended every now and then in trying to get a best model that can actually help the government collect, but also be fair to the population.
Okay.
Yes.
Yeah, now we continue because I really wanted to clear that before we even move forward, because rental tax became so popular and very many people were scared that now my landlord is going to increase my rent fee because of this tax now. Thinking that the tax had just been introduced. Now that you've cleared that the tax existed.
But also, you see, as the authority develops and applies advanced technology in trying to assess and administer tax, you realize that even in the normal businesses, people have always, in a way, so that maybe the authority can never reach where they are. Now, the same thing applies to rental. That people have always been hiding somewhere, fearing and assuming that they can never be reached at. But where we are, at least I've seen a number of them come to my office, a demo consult, trying to consult what do we do. The authority is on our door, is knocking. What do we do? Now, tonight, we would want now to explain so that our people understand if I'm earning this kind of income, specifically from rental properties, what are my obligations, when and how. Yes,
exactly.
Now, starting with individuals, me and you.
Yes.
The law is clear that if I have a building I'm renting out, in a year, first of all, I discussed last time that every Ugandan who is employed or earning, there is that threshold that is not taxed. And we said that formally for formal employed people, 235 is not taxed. Even when you are an individual and you are operating a rental business, you have that threshold. You have that minimum amount below which you can never be taxed. Now, rental is normally looked at in annual terms, in 12 months. So now the 235, which is the threshold below which you can never be taxed, is compounded into annual terms. So that now takes us to 2,820,000.
Yes.
That if I'm earning through rental, then 2,820,000 is free of tax every year. I want that to be clear. That minimum is like they leave it for you as a Ugandan that have that. Above that, then the government is interested in knowing how much did you earn so that we apply a tax rate. Now, in the current law, the moment you subtract the threshold, the 2,820,000, the balance, the amount that remains, URA taxes or applies a 12% as an individual.
Pardon?
If you have made 100 million
Yes.
in a year
From rental.
from rental properties,
Yes.
before you are taxed, the government will first allow you a threshold of 2,820,000. That is a figure that is not taxable. Above that, the difference between your 100 million and the 2,820,000 will be taxed at 12%.
So the more than 97 million is
Yes.
what will be taxed
At 12%.
at 12%. Okay.
Yes. That's the new law. Of course, this has changed. Some years ago, it was 30%. At one point, it was 20%. So every now and then, the authority and the Minister of Finance keep changing, with, of course, a number of reasons, trying to get a rate that can be fair to the taxpayers, but also help the government raise revenue.
Okay.
Now, you realize that I'm not talking about any other expense
Yes.
for an individual.
Yes.
Now, the law, as I have said, the rate was reduced. First of all, it was at 20%, and when it was at 20%, they would allow expenses of 20%. That previously it would be get your 100 million, subtract the threshold, first allow a 20% for expenses. Then what remains, subject it to 20%. That was the previous.
The previous law.
Yes. Now, after that, a year after, it was introduced that both companies and individuals tax at 30%.
Okay.
That changed now to the current one.
Of 12%.
Yes, that's what I'm saying. The current law, subtract the 2,820,000, the balance taxed at
12%.
So that means there is no any amount that is allowable or allowed as an expense. I want that to be clear. Because at the end of the day, we need to differentiate if I'm an individual or I'm a company, where do I, which side is favorable for me? Now, for an individual, you are not allowed any expense other than the minimum threshold of 2,820,000. That's how an individual is taxed.
Okay.
And an individual, again, if you are...
So in other words, as you file your returns, you are not supposed to indicate any expenses?
Yes, as an individual.
Okay.
Yes.
Even when I do installations, repairs, and what, they consider it under the other 2 million.
But also to appreciate it better, the rate is small compared to the company rate, as we shall see. But whereas the company, they allow expenses, but the rate is higher, 30%. So there is some logic behind it. That yes, we are not allowing expenses, but we are also applying a smaller rate, 12%.
Okay.
Yes.
Oh. Now, I think that is understandable, because someone would sit back and grumble and say, but I mean, I incur in expenses. I repair, I do installations, I do this, and then they would call those expenses. But now, from that, I think that explanation is now clear. But I think, as we talk about individuals, at what level or who does URA consider as a landlord? Yes.
Now, individually is someone who owns a property and receives the resource or the rentals, the rental fees from this property.
Because I know some people who at one point have said they have rentals besides their main house, but they say, these are my children who stay in these houses.
Of course, those games we have at one point tried all of these, but with time, you can easily get to know.
Okay.
Now, the point I was trying to put across is that as long as you have a building that is being occupied by another person at a fee, but also, if it is a building, you constructed your building, let's say here in town, you cannot convince URA that you have someone who is operating a shop in your building at no fee.
I give them a pro bono service. They can start their life from there.
For how long? For how long can you do this?
For
Remember,
a year.
Whoever built a building here in town is there to make money.
No, someone would
How many people can you put and you do your pro bono services and for how long?
Someone would say they are called to help others. So when you get your standing point, you go, another one comes, they get their standing point, they go, you're free of charge.
I remember last time what we agreed on between me and you, we said that when we are talking casual and here and on the show, but when you go to the authorities actually to convince them that this is what happens, it is not that easy. Otherwise, all of these buildings in town wouldn't be paying rent. They wouldn't be paying rental tax. Yes, it is not as easy as we may think, because at the end of the day,
here we think we are so smart we can convince them.
Yes, but now the government is smarter than us. That's what I can say on that. Now, to add something on as an individual, that as you file your returns, you are meant to pay your tax in quarterly terms. What am I saying? That a year has 4 quarters. So if you estimate that in a year I will make 100 million after the other threshold, then you need to divide it into 4 bits. That every quarter you pay a quarter, so that by the time you make your 12th month, you have already paid.
What about a situation where I have a house, the tenant occupies it for 5 months, then it spends 4 months unoccupied, and then I have a tenant in the remaining 5 months?
Ideally, there is what we call a provisional return.
Okay.
Normally, a provisional return is an estimate. But then, after the period is done or has expired, you file your final return. So the final return brings out the true picture. A true picture in a sense that you have your records, as we shall discuss at a later point why we need these records. That you are showing the authority that I invoiced these people and this is how they paid me. Now, I want to make this clear also. When we are talking about invoicing and paying, an invoice alone is not enough. So you need also to show actually how money moved. Quite often when we have engagements with URA, one of the important documents they ask for is a bank statement. If you are dealing with so and so, what shows that actually this money moved from here, this other point, very important. Yes. So at that point, if you can allow me, so that we head into non-individuals.
Yes.
Now, non-individuals, we are looking at companies, we are looking at retirement funds, we are looking at partnerships, we are looking at trustees. Now, you realize that, for example, taxation of partnerships, the difference is that when you are earning as a team of partners. But when it comes to taxation, it is actually the individuals that bear the tax burden. I don't know if you pick me on that. That Mukaras and Dedan partnership have made incomes out of rental. We are earning as a partnership. But at the end of the day, a partnership in itself is not a legal entity that will actually own these incomes. But the incomes will finally go to the pockets of the individuals.
The partners.
Yes, the partners, now Mukaras and Dedan. So what does it mean? That at the end of the year, yes, the partnership will declare, will file a return, say these are the incomes that we have made, but then does not pay a tax partnership does not pay a tax, but the individuals should or will declare these incomes and pay the resultant tax. What does that mean? That the rate applicable to an individual will still apply to this partner in a partnership. Yes, you are working as a group of partners, but at the end of the day, you are taxed as individuals.
So, as you're being taxed as individuals, do you still pay the 12%?
Exactly. That's what I'm trying to say.
So, I pay the 12%, you pay the 12%.
Yes.
Isn't this overcharging?
Not really. Because you see, the partnership, as I said, does not pay any tax. It is just a vehicle through which people come together and do business. But after doing business, where does this money go? It goes to these individuals. So the tax board is interested in the individuals taking the incomes, not the vehicle. Different from the company, because the company normally, with the part of limited liability, gives now a company some, we call it, it is totally different from the people who invested in. The company and the investors are actually different entities, different taxable entities. You tax a company on its own, you tax now an investor or a director on his own. But now for a partnership, you cannot separate the partnership itself from the partners.
So meaning if we are 4 partners who come together to have this property, all of us pay.
Ideally. Pay, but pay on the share that you have benefited.
Meaning if it is below the other, if I receive, if each of us gets below the, is it 2 million and?
The 2,820,000.
820,000. Yes. If each of us receives this, then we don't qualify to pay tax?
Exactly.
Oh,
exactly.
okay.
The principle behind the partnership taxation and accounting is that you work as partners, but once you make a profit, you go back on the drawing board and say, okay, how much had we contributed in terms of capital?
Yes.
We had contributed in these percentages or in these ratios.
Yes.
So can we also divide the profit in these respective ratios? So at the point of dividing the profits in the other respective ratios, it means now the incomes are going to the individuals from the partnership.
Yes.
So the taxman is now interested in who is this person who finally received the income, and in this case, the rental fees.
So meaning, there's something I'm looking at.
Yes.
This is 2,820,000. So even if I have 2,825,000, I still pay the 12%.
Yes. Of the difference.
Yes. The difference is now 5,000.
Yes.
So I pay the 12% of the 5,000.
If you have to go by principle, that is it.
Okay, so it is this serious.
Just compare it with if we say below 235, no pay as you earn. Above 235, there is pay as you earn.
Even if you get 240.
Because the difference is 5,000.
Yes.
So you'll be taxed now 10% of the 5,000.
Let's take a short commercial break. When we return, we are going to continue with rental tax. Stick with us. I now see it is more interesting at this level. Don't go anywhere.
This is Church of Uganda Family TV, enriching lives.
We are patiently waiting for the news of who the two new bishops are. We are waiting, and sooner or later the news will be broken, and we shall celebrate the men of God that God has called into his ministry. Of course, the process is still on in Reza, and we believe that it all comes out as safe. Just keep it on Church of Uganda Family TV and on our social media platforms for all the updates in regard to the two new bishops we are expecting. But we are still continuing with Family Hour, and today we are talking about rental income. Before the break, we talked about now how individuals are taxed, and we also talked about how partnerships are taxed. But now in this particular session, a segment of this program, I want us to look at now the companies, because I think this is also something that might cause confusion. Partnerships, individuals, and then companies. How are companies taxed?
Now, companies, in the first place, the difference between an individual and a company, there are a number of them. One, that a company is actually allowed the expenses.
Okay.
The expenses that are incurred, they say security, you are paying for utilities, you are paying for painting and all of those other
renovations.
Yes.
And,
those expenses are allowed.
Even however, partnerships are not supposed to include expenses on their filings.
For partnerships, when you look at the accounting bit of it, in earning, you earn as if you are not an individual. But then at a point of income distribution, that's when the individual bit comes in. Yes.
Okay.
Now, for companies, as I was saying,
yes, that
expenses are allowed. But these expenses have what we call a capping. You cannot say all the expenses that have incurred I will just include, because that way there is a likelihood that you can actually find yourself in a loss every now and then. So the expenses are normally capped up to 50% of the gross. That if you have spent so much, then you cannot go beyond 50% of the gross revenues. So in a way, they are protecting people who would want to overclaim expenses so that they go into a loss. But in case you find yourself, your expenses are below 50%, then you are good to go. You will claim all these expenses. Let me hope that one is clear.
Yes.
The other important point is that companies are taxed at 30%.
Okay.
Compared to 12%
of individuals.
For individuals. Now, the other important bit, of course, the other tax, other than when you look at the tax we are discussing, what we have been talking about is more of income tax, but for people who earn through rental income or rental fees. But there is another tax that actually people who are in this business are required to pay depending on what level are they. And this is value added tax. Now, for value added tax, if you are in a residential property business, residential in a sense that I come, rent and sleep for a year or for years, then that one is outside the value added tax bracket. You don't need to pay value added tax or VAT. But if you are in a commercial property business, what am I saying? You are in town here in these arcades and all that.
Yes.
Then, as long as you hit the other threshold we talked about last time, the 150 million.
Yes.
that if you are in a commercial renting or letting out of properties above 150 million, then you need to also register and pay value added tax like any other person in the business. But also there is some type of service or rental service that is called service apartments.
Yes.
It is more like residential, but these commonly they are fully furnished. People just come and stay in for a short while, maybe 2 weeks and all that. That also falls under the category which is vatable, or which is required to actually register and pay value added tax
as long as
one is above 150 million. Yes. So I've had questions, someone saying, me, I'm in rental, why should I? No, the law is clear. As long as you are not in residential property business, then the other ones are vatable as long as you are above the threshold. Now, I remember recently there was an engagement between URA and arcade owners. They were actually being advised that register, enroll, and be on IFRIS. That as you transact, because I mean, one building, the question of the threshold, one building actually it is in a month. How much are these guys charging downtown? So one arcade in 1 month or two, you are already above the 150 million.
True.
What's the implication? That one, you should be on the VAT register. So I said last time that beginning Jan of 2021, everyone who is on the value added tax register by law is required to be registered on IFRIS. So is meant to issue a document, a fiscalized document, which has been authenticated by the back end of URA. That, as you say, let me issue my invoice on my PC or on my phone or whichever device that you decide to use. Possibly we shall get time and talk about IFRIS in detail.
Yes.
Because it happens to be a new development which people must actually appreciate and understand. So the point I'm trying to arrive at is that as long as you are in a rental, you hit the threshold of 150 million, it means you are meant to be on the VAT register. But also it means the invoices you are giving should be fiscalized invoices or IFRIS invoices. Now, allow me to say this, that quite often as we do what we do at a demo consult, we have seen scenarios where I'm renting a church house, I'm paying 4 million, but now the landlord is giving me a receipt of 500,000. Now, what's the implication? That my side, when I'm declaring my expenses to the government, I would want to claim the 5 million I'm paying. But the document that the landlord gave me is actually it is less. It is of 500,000. Now, URA a few years ago came up with a procedure that when you are filing your income tax returns, specifically on an expense called rent, you must be having a TIN number for your landlord. That was meant now to curb the, can I call it the under declaration of landlords, where you are earning 5 million from Mr. Mukaras, but for you want to declare to the government that you are earning 500,000.
And actually that happens on very many buildings around here.
Now, this is something that comes on table. You ask someone, so how much is your rental? 5 million. 5 million times 12 is 60 million. But do you have the receipt? Someone says, but the receipt I have has 500,000. Do you have the TIN for the landlord? Someone is like, no. When I asked the TIN, they told me I should get out of the building. Which becomes now a big problem in the market here. That yes, I'm incurring an expense called rent, 5 million. But I'm only given a receipt of 500,000. But also, I'm unable to claim this expense because I don't have the TIN for the landlord. Now, the moment you put in an amount called rent, the return cannot accept. If you disguise and you put in, of course, there are some other sections where you can put and actually the figure goes. As long as it is related to rent, if you don't have a TIN for the landlord, URA will not accept this figure. They will disallow it. Now, disallowing it is, in simple terms, they are saying this is not an expense.
Yes.
If it is an expense, give us the one you paid. Now, the principle behind that is that they would want to reach at who are these people are making money, earning through rental, but they are hiding. So it is a mechanism to say, as long as you know you are paying 5 million, make sure you get it in from the person you are paying. Remember, I had also stated last time that an expense to be allowed by URA, by law, an expense above 5 million, you should be having a tin for the person you are paying.
Yes.
Why are they doing this? Because they don't want us to hide that in Mukaras you are earning 7 million from somewhere, let's say in a building, but you are hiding. So it is now incumbent upon me, as I negotiate a contract or tenancy agreement to enter into your building, I must ask for your TIN number, because I know, especially sessions like these are meant to actually educate our people.
Yes.
That don't just enter in a building before you agree with the landlord, because the question of tax will follow you up. Why should I pay 60 million in a year and I cannot use it to reduce my tax liability? It is illogical. It does not make a business sense.
Yes.
So my appeal is that people should insist it is their right to ask the landlords for the TIN numbers. That is, if they are to claim an expense called rent in their income tax returns.
There is a situation where, I'll give an example of Church House. Church House is directly in the hands of Church Commissioners Holding Company. This is the business arm of the Church of Uganda. But it is managed by a different property manager. So who of the two pays the company tax? The Church Commissioners Company or the property manager that manages it?
At the end of the day, the burden of the tax rests on the person who finally receives the income. What am I saying? That the agent helps in managing and pushing people to pay, but finally the money ends with the holding company you have talked about. So in effect, it is the holding company that pays the tax. It can be an arrangement that collect before you collect, also deduct what is meant for to go to your area as a tax. But even then, who has paid the tax? It is Church of Uganda,
yes.
Ideally.
Yes.
Yes, the agent gives you a service of managing the building, managing collection, and all that. But the liability, the obligation to actually pay the tax rests on the holding company, as you stated.
Okay. There is something you talked about as we are categorizing the taxes. You talked about trustees and retirement funds. Do they also pay the same tax as companies?
Thank you. You are actually hit it right. That retirement fund and the trustees, they normally pay at 30%. Okay. So the treatment is more of a company than an individual.
Someone would really want to know what these are. What are the trustees? What are the retirement funds? Because when you talk about retirement funds, someone might say, hey, so when I get my NSSF money, so I have to pay the 30% tax.
Not really. I will give an example. One of the retirement funds that I know is Makerere Retirement something. It is a body that takes care of the benefits to Makerere staff as they retire. That every other month they keep contributing something to this fund. As we are mentioning, it is a retirement fund that you are preparing for the days of drought. When you are still working, it is a rainy season, so you keep putting some percentage as they agree. Then as you retire, times when you are actually getting old and you can no longer possibly earn as you used to, then you apply and get some of these benefits. Now, as these retirement funds receive the money, they also invest.
Yes.
So, as they invest, some of them are in properties. So here we are saying, if you are, for example, that Makerere retirement fund something, I don't know the word is properly, but it's there. That if you are into property business and you are also earning rentals, how are you taxed? So you are taxed the same way Mukaras Limited would be taxed if he was also in rental business.
Talking about that still, we know now very many dioceses have are building pension houses, and the instance is so that money generated out of the pension house can go to the retired clergy. That is why they call them pension houses. So is it now the diocese that is supposed to pay rental tax for this pension house?
Because first look at it, who is managing this building?
The diocese.
It is in the hands of the diocese. I guess it has an arm, the way you have talked about the other holding company.
The church commissioners holding company.
Exactly. It is a company. It also in a way becomes a business arm. That as you are planning for these retired people, you are investing in advance. So as you invest, you also make profit. So it is on the profit. You know, the principle of taxation is you are taxing on the profit.
Yes.
I remember last time I said
yes.
that if you make a loss, there is no need why you should be taxed. So being a business arm, the principle is the same as the normal companies.
So you have to pay the 30%
yes.
on the
It is different from now the church in itself. The treatment of a church, that is a different, it's a different category. But as long as you say limited something, you are creating this arm to also go in business and compete like any other business entity. So as you make an earning, you are also treated like a taxable person. Yes.
What about trustees?
Now, trustees, we have seen scenarios where, for example, I can say someone starts up something and puts it in the hands of people to manage. That even when I'm no longer there, I have my estate.
Yes.
There are people responsible.
Yes.
So as this estate is also possibly owning rental properties, it is also making
profit
and earning. So the way the retirement funds are taxed, the way companies are taxed, the same way these are also taxed.
You pay the 30%.
The 30% after looking at how much you have incurred as an expense, but also not forgetting the cap, 50%.
50%.
Yes, I talked about the expenses being capped so that you don't just erode all the incomes through expenses.
Yes. Now, still on companies, is there no provision of the below 2,820,000?
Thank you. It doesn't apply. Why it doesn't apply? When you look at the thinking behind the 235, it applies to individuals. I can say, I don't know the framers of the law, what they were after. Remember, that figure, by the way, was revised from, I think, 150 something. I think the lawmakers are looking at the minimum kind of life an individual can have. It's in a way, if it was an employment, it would have been the minimum wage, something like that. That can you have this basic, below this, leave this money for this person to survive. Now that is an individual incentive or benefit. That does not apply to companies. Yes.
Okay. I thought that companies can also enjoy this so that as you get your profit, you look at this in consideration. So meaning that whichever profit you get as a company, you have to pay the 30%.
Yes.
What are your parting shots on rental tax?
Rental tax, as I said, it is a developing area where the government through URA they are putting a lot of emphasis on rental. They want to know who stays where. I saw last time they are doing some marking. They are trying to link all government bodies in one system so that as you pay, for example, for water, if you are saying you don't have a building but you have 10 meters registered in your name, who are you? That's one of the examples. So it is an area that everyone who is in this business must wake up and do the planning early enough, because it is a matter of time. There is no more hiding in that area. The government is interested, URA is interested, and it was clear that people used it to hide their money. But it is no more, because they are trying to follow up on each and every bit. It is no longer safe. Yes. So I advise people, let's get into this compliance journey. That's the only way we can manage taxes. It is more costly for you not to comply than complying.
Okay.
Yes.
You said it is more costly for you not to comply than to comply, and indeed, at least with this series, I've witnessed that. I've realized it is better you declare and pay the taxes than. I was sharing part of the story of someone I know who told the tax people that, me, I don't have rentals. These are houses occupied by my children and my grandchildren and my relatives. So one time in her absence, someone comes up and greets one of the tenants. So they interact and the tenant tells them that they come from Tororo. So this taxman goes back to the one who offers houses to the relatives and asks them, where does your family come from? My family comes from this part of the country and this part. Do you have any relatives in Tororo? No. Among your children and grandchildren, do you have anyone from Tororo? No. All of them come from this other side. And they say, but the other person, tenant number 4, comes from Tororo. He's a German.
Can never hide for life.
And now that explains why you can never hide. Because you may hide as well, but the tenants may never cover you because they pay you their money. Well, thank you so much, Mr. Dedan. And we really appreciate because you come out and create awareness. Some of these things, like you talked about the tenants on some of these buildings. At least I know people are being cheated. You pay a different amount and they give you a receipt that has a different amount. And there is a way the landlord will convince you to accept it. But I mean, sometimes we don't know the repercussions until when you come out to talk about this. Thank you so much. We really appreciate it. And to the viewer, I believe you're learning at least something out of these discussions. And we believe by the time we close up taxes, you will now be one of those compliant citizens. Thank you so much for giving in your time to watch Family Hour today. Adrian Austin Mukalazi is my name, Didmas, Brinko, and the entire team. We meet again tomorrow as we discuss leadership and governance. But next on your TV is Soul Moment. You can follow our social media platforms. This show is on YouTube, so just in case you missed out some bits or you want to listen again, please get to our YouTube channel, or your Family TV. You'll find this show there and you will follow through, and feel free to comment. And when we come back at talking about taxes, your answer will be brought as well. It's a good night from the entire team.
Thank you.